Well, hi everyone, and welcome to the Buffett and Beyond Saturday Market Recap Letter. And this is April 29th, yesterday was the last trading day of the month already. And remember, folks, if you want to live on the beach like Jimmy Buffett, you've got to learn how to invest even better than Warren Buffett. And this week, the market was correcting at the beginning of the week as all the indicators were pointing down, and there was no doubt that we were going to go down to lower levels. But then Thursday saw the market rally, followed by a continuation of that rally on Friday, which is very, very impressive. And as we near that 4,200 level, which is the top of this trading range, we have to wonder if this market is going to keep going. With the Fed meeting on Wednesday of this week, probably Monday and Tuesday won't be much action in the market. But don't forget, we have Apple to report this coming week, and we also have Starbucks, both of which are in our portfolio. So it's going to be an exciting week, even though the first couple of days might be a little bit dull because of the Fed meeting on Wednesday. And our weekly stock analysis, well, we're going to look at Tesla because after a pretty decent decline, this may be time to add to your positions, which we did in some of the portfolios on Friday. And Tesla is after increased market share for the long term while sacrificing profit over the short term. And that's a good move by Tesla because they've lowered their prices about 5 times this past year already and then raised them just a couple of weeks ago. But by lowering the prices, people think that there will be, well, they don't think, they know there will be less profit to the bottom line. But Tesla says, nope, we're going after market share. We're going to keep Tesla the name that means electric vehicles. And our ETF video, wow, look at the semiconductor ETF and a 27% gain in our top 5 stocks in that portfolio. And with the 2-day reversal in the overall market, will the ETFs participate? So we're going to look at a whole bunch of ETFs. And what about the housing ETF? Well, we're going to show about 3 different ETFs from 2 weeks ago, what the charts look like and what they look like as of yesterday, which was Friday. So, folks, let's get on with the day. And when we look at the S&P 500, yeah, we can see that it went down and it almost down below the 20-day moving average, which is this middle line in here, and almost down to the bottom band. And then all of a sudden, Thursday popped up above that 20-day moving average, and we just kind of thought it was a one-day wonder. But boy, oh boy, the second day, which is on Friday, the second day of the rally, this market opened above that 20-day moving average and continued up almost to this top band. And look where this 4,200 level is, and that's what we're looking at, folks. We talked about this 4,200 level a long time ago, but boy, at the beginning of this week, we didn't think it was going to get up there for a while, but all of a sudden it surprised us because earnings are coming out a little bit better than expected, especially on the larger companies. And don't forget, we have the anticipation of the Fed meeting on Tuesday and Wednesday, and the thinking is the Fed will raise by 25 basis points and then hold off for a while to see how the increase in interest rates over the past year have affected the market. And then when we look at the SPX over here, we can see blue line of 50-day moving average, red line 200-day moving average. So the market is above all of them. And here's that high from almost the 4,200 level, and we are approaching that high once again. So it's going to be very interesting to see if the market falters at this high and then goes back down, or if it is ready to break through to the upside. Because don't forget, before the market officially goes into recession, the markets in the past have always anticipated that, and the bottom has already been put in before the official recession enters into the market or into the economy. So this is going to be very, very interesting. And then when we look down here, we thought for sure with this declining line that we were going to get more of a correction, and all of a sudden this black line turned around, and now sometime this week, if the market keeps going up, it will cross over to the upside once again. And this is a very, very strange pattern in here. after this kind of decline from a recent high in this indicator to have it go down and then start and turn right around again. So we have to be suspect of this. But at the same time, that was a nice rally on Thursday and Friday, and you can't doubt the market. If the market says I'm up, and it is up, you got to believe it's up. So we have to be very, very careful in here. But for your long-term holders, you're in the market fully, so stay there. And when we look at the QQQs, and this is the one that bothered us so much because we had this higher high in here and we had this lower high down here, and then all of a sudden the market has turned around and reversed itself. So this is either a very, very strong market or this is a pretty decent fake out. But boy, oh boy, the QQQs are looking good. Actually, we just surpassed this recent high, and all we have to do is stay there. And that will be this coming week's chance to keep this market moving higher, because then we would be seeing higher highs in the market. But we want to see higher highs in the indicators too. So that's what has us confused. So portfolio protection, yeah, we're protected. This is about a $135,000 portfolio. We're protected with 3 SPY puts at the 410 level. And right now the SPY is at 415, so it had fallen below that 410 level, and we were feeling pretty good about these puts. But right now we're above this 410 level. Hey, our portfolios are making money, and we have insurance too. So those of you who are using portfolio protection, you keep it all the time. And this market really has to turn up for us to take money out of these puts. And some of you have puts all the time, and so you're protected. You don't have to worry about any fall in the market, especially after the Fed meeting on Wednesday, should they come out with some surprising statements, which we don't think they will. So, folks, we had an unbelievable week this week. It started out in the down direction. All the indicators are pointing down. Then all of a sudden, with some of our big cap stocks coming out, we're looking at Microsoft, we're looking at Meta, we're even looking at Amazon and Alphabet. And folks, the market liked what they saw. So we had actually a pretty good week. We don't have to worry about that decline that we saw last week coming on. And folks, go out. Monday and Tuesday probably will be non-events in the market because of the Wednesday Fed Chief Powell comes out and tells us what the Fed is thinking and maybe a little future guidance. So you might as well just take a 4-day weekend and we'll see you back here. But we'll be back here on Monday, folks. So you have a good weekend and stay safe.